Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Okay, today, what we're going to take a look at is laggards, stocks that have been down, stocks that are definite sells. And I know a number of folks have these stocks in their portfolio, and it is vital that we can recognize stocks that are just immediate sales, because it doesn't make sense in an uptrending market. Folks hold on to stocks that are just not going anywhere and are actually losing money. So we're going to take a look at a number of the stocks. Obviously, I can't take a look at every single stock, but we'll take a look at about 10 stocks that are definite sales. Okay, on tomorrow's show we'll take a look at the energy sector. I know I said on this show we'll take a look at, but probably looking at the both of them, we won't have enough time after we do the analysis. So I will reserve that for tomorrow. Okay, taking a look at the markets now, the S&P 500, things are actually quiet. The market is trying to challenge the high that was made earlier in the month. The good news is that we have had some minor recovery up to this point, where we see stocks battling. It's positive, it's negative, it's positive, it's negative, and at this point in time, the market is up. S&P 500 up 1 point or 0.04%. The Nasdaq is down 1.44 points, or 4.03%, and the Dow is up marginally at 16 points, 0.07%. So we see a battle going on here between the bulls and the bears. If we take a look at the intraday charts, we see where we had the recovery. This was the recovery yesterday, and today we have just been meandering out. Strong resistance is in S&P 500 is at the 2470.75, and also the 2490 and 90 level. That is strong resistance. Taking a look at the Dow futures here, the Dow, we see markets resistance is up at 22,132, and we have support at 21,800. So that's a support level in the Dow. Dow is still near the all-time high, so it will be interesting to see what the bulls, if the bulls can muster the energy to push this market to new highs above 22,200. Taking a look at the overseas markets, we see that the German DAX, has. Oh, that's the Dow. I was wondering how the DAX is looking so positive. We see that the DAX closed up 11 today. Let me just bring it up. The German DAX closed up today, positive on the day, and what we saw with the DAX is that it has declined much more, as I've been pointing out. It has declined much more than the S&P 500. So there is some divergence here, and that can be a warning sign when Europe starts to diverge from what's happening here in the States. Taking a look at the FTSE in England, there is some divergence in the FTSE, but not really that much. The market is still near the highs. And in examining previous declines, we see that sometimes the FTSE starts to really decline before the other market averages. So that's something we're going to keep in mind. The Nikkei was up 216 points today. The Shanghai index was up 14 or 0.44%. So overseas was over in Europe and in Asia was positive. The Dow, let's see if we can finish positive on the day. It's trying to eke out of again, but we just have to to wait and see. Taking a look at the US dollar index, US dollar index is up sharply this morning. We see that the market is honing in and trying to take out the 94 level in the US dollar index. And because the US dollar index is up and looking like it's bouncing from this area of support, we see that the different currencies, we see that euro is down on the day. Looking or challenging support at the 117 level. The British pound is down sharply on the day, coming into an area of this area at the 132 133 level was significant resistance in the British pound. It was Fibonacci resistance for you technical traders out there, and the market is declining from that level. Nothing much really has been happening in the British pound ever since the sharp decline of October last year. We are just seeing a meandering recovery here in the British pound. Looking at the Canadian dollar, we'll just take a look at most of the currencies. The Canadian dollar is down on the morning after hitting resistance. Let's take a look at the weekly chart. We see that this area around the 80 level was strong resistance, and the market has rejected that area. So we have hit resistance and the market is turning around. Okay, let's take a look at the final currency we'll look at is the Japanese yen. Now, as risk has abated somewhat, the market has recovered. Notice how the Japanese yen is just backing off. Typical behavior for the Japanese yen. It hit resistance near the 92 level, and the market is just backing off slightly. And remember, we spoke earlier or in a previous show really that when risks start to go up, when we see the VIX spike and volatility increases, we normally see a move up in the Japanese yen and also the Swiss franc. But the Japanese yen is backing off of the high near the 92 level. Looking over to the precious metals, we have gold. Gold market is down, and the chart of gold looks eerily similar to the Japanese yen since December. Let's take a look back at the Japanese yen. We see a bottom in December and the market recovering slightly. And the chart of gold, we see a bottoming in and around December and the market recovering slightly and hitting resistance up at these levels. So it looks like the correlation with the Japanese yen and gold at this moment, it doesn't always hold up, is fairly strong. And the charts look eerily similar, the chart of the Japanese yen and gold. Something to bear in mind, this can decouple at any time. That is very interesting to point out at this time. Looking at the silver market, silver is under pressure also, and we see what I want to see in silver is this pattern of lower highs, lower lows being broken. We want to see the market. We want to see the market not take out this low. Actually, we would want to see the market, even if it dips, go back up and start to form higher highs and higher lows for me to get bullish on silver. Folks have been saying, why am I so down on silver? And the reason is that the market, the price action at this point in time is not favorable to a bullish move in silver. When the price action turns around, then I will be looking at silver more positively. Looking at oil, looking at the oil market, oil is negative on the day. Actually, it turned slightly positive. It's meandering between positive and negative on the day, but like silver, oil has this this pattern in oil is lower highs, lower lows that we are seeing. And for us to get bullish in oil and even the energy sector stocks, uh, or the oil and energy sector stocks, we will need to see oil move to the upside and break this series of lower highs and lower lows. Okay, let's take a look at some of the stocks that I recommend or that I see as stocks to get rid of in your portfolio. And let me just premise this on the fact that we're not looking at some of these stocks in terms of fundamentals. I know the mainstream opinion will have you look at the price earnings ratio, the earnings potential of the stock, blah 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 blah. We're not looking at that. We're just looking mainly at the price action. Why are we looking at the price action? Because markets cannot move upwards unless large money is buying the market, and large money is bidding the price up. So it goes to show, or it stands to reason, that if something is in a steady uptrend, that means capital is moving into this asset and capital is bidding the price upwards. That's the only way the prices of a stock or any asset can move to the upside. So if, on the other hand, if prices are moving down steadily, it tells me that large capital players are bidding the price downwards and they are not really interested in that stock. They are not looking at that stock at this point in time. Maybe it will turn at some point, but at this point, it is not. They are not favorable. So that's why we can just look at the price action, what's happening with prices, to make some of these determinations. Now, let's take a look at popular stock. Let's take a look at the stock of Amazon before we get into the bearish stocks. Look at this. Look at this chart. Amazon is moving steadily upwards. Higher highs, higher lows we're seeing on the chart. Higher highs, higher lows. And the S&P 500, the chart of the S&P 500 and the Dow is also higher highs, higher lows. So this stock is in tandem with Amazon. Or Amazon, sorry, is in tandem with what S&P 500 is doing. So what does that say? That says to me that this is a stock that I would be holding on to at this point because it's in a steady uptrend. It also says, based on the reasoning that we spoke about earlier, that large capital has been bidding the prices up and of this stock, and that's why it's in a steady uptrend. Okay, so let's take a look at some of these laggard stocks. Now, first one we'll take a look at is XOM. If you notice, ExxonMobil market, S&P 500 is moving this way. This stock is moving this way to the downside. And it with some of these stocks, it stands to reason that if the market sells off, these stocks will be hit even harder. If it cannot perform well in an uptrending market, what will happen if the market turns around and heads south? So this is an example of a stock I would not. This is not a buy at any. This is not a buy on my analysis, on my system. This is actually a sell, and I will be looking to offload a stock like this. Looking at the previous high of ExxonMobil. Previous high of ExxonMobil was in 2014. The market topped out in 2014 and has been heading down steadily ever since. At one point, just before 2014, it was in an uptrend. Uptrend topping out at 105. But as we say on this show, at some point you take your profits and run. And this market gave a sell signal long ago to profit, to take your profit from this stock. Again, what I'm telling you is just my opinion, my analysis of what to hold, what to buy, and what to sell. The S&P 500 is heading one way. This is heading another. Is the opposite. This is, on my view, is a sell. PFE, believe that's Pfizer. Okay, this is. I wouldn't say this is a sell. This is. I would be holding this. I don't know how this made it on the list, but this is a hold. It's not particularly. It's probably on the list because between July and September, November, when we had weakness. Oh no, between November, since it's rally in November, this actually has underperformed. As you remember, since November to now, the S&P 500 made new highs, while this is not making new highs. But this is a stock I would consider maybe a hold if you have it, and I will release this stock below $31. Any drop below 31, I'll be out. Let's take a look at. I believe this is another energy stock, and this is the. As you notice, the whole point of this show, the whole point of what we're doing is for you, the investor, to be able to recognize when to buy and when to sell certain instruments. You don't really have to go to people, financial advisors, to say, is this a very good stock? Or you don't have to be poring over numbers and research reports for a particular stock. If you have a portfolio of stocks, you want to know if a stock is any good, just pull up a chart and look at that chart. Now, this stock, Chesapeake Energy, I mean, S&P 500 has been very bullish, and look at the performance of this stock. This is just a steady downtrend, and this is S&P 500 is heading this way. This is heading this way. This is a definite sell, and I wouldn't even. This is one of the worst stocks I've seen for the year. Between 2002 to 2008, let's just take a longer term look at this stock. When we had that huge bull market in the value of oil, this actually peaked at $69.99, just shy of $70. And ever since that peak in oil, the market has been going down, and we are now at $3.95. And unless this series of lower highs, lower lows is broken, I would not be looking at this stock at all. I know there are folks who would argue that it's a bargain. I mean, look at the psychology of this downtrend. When it was, and this is how people constantly lose money in the markets. It topped out near 70, and then when it dropped to 55, folks were saying it was a bargain at 55. Then 55 went down to 45. It was a bargain at 45. 45 to 35, 35 to 25, 25 to 10. It went up to 31 and has gone down to $3 cents or $3.93. So all the way down, folks have been saying it has been a bargain. It has been a bargain. How you invest properly is to cut your losses. Once, if you enter at 55 and it drops down to 50, 45, exit and look for something else. This bargain hunting in stocks is how investors lose a lot of money. Okay, moving on. Let's look at SIG. Similar chart to Chesapeake. Let's just take a look at the bigger picture. Was in a bull market between 2008 and 2015. Very smooth uptrend, higher highs, higher lows, very smooth, very nice. But as we say, at some point you have to know when to take your profit. So if you entered, let's say you entered at 40, the market went to 150, it dropped down to 120, exit this market. The trend is over. That would have been a good profit. Don't hold on to this until, if you entered at 40, don't hold on and let the market drop back down to 40. How much money would you have made? Zero. Uh, so so it goes to show that when you have a portfolio of stocks or whatever, you need to pay attention to it, because these markets will go up and they will go down. Okay, this is a definite sell. Signet Jewelers. Look at UAA. And I hope you are seeing a theme here. Market was in an uptrend. Market was in a significant uptrend between 2009 and 2015. Market topped out in 2015 and has been going down ever since. It went roughly from $3 to $54. Very strong move. Again, even if you got in at $10, you saw the market move from 10, or even sometimes folks don't like to get into stocks on the $15. So let's say you get in on a 15, you got in at 15, the market moved all the way up to 55. Very nice move, but at some point the market corrected. You exit that market. And don't let the market drop back down to 15 where you originally bought it. Okay, I hope you're beginning to see a pattern here of what we're looking for in stocks that quite frankly are just sales. Transocean, this stock topped out at 160 in 2008. Market is currently at $7. Again, there are some folks out there who advocate buying and holding. Some financial advisors out there that say you must buy and hold for the long term. How could that ever be accurate? Let's say you bought this. Let's say you met with your financial advisor in 2005, or even let's say 2005, 2006. The market was at $20. It ran up all the way to $160. You see that you have a very good profit, a nice profit. The market starts to trend back down. And should you then hold on to the market and let it drop below your original buy price, or not take any profit even though the market has come down significantly? I just don't understand the buy and hold mentality. But that's what is being advocated out there by financial advisors. That's what a lot of mutual funds advocate, and that's why folks lose a lot of money in the markets. During bull markets, they may see some paper profits, but when markets turn around, the profits evaporate. And during this recent bull market, this is definitely not a stock I would be holding on to. Okay, let's take a look. Let's speed up the process here, because I think you are getting it now. SYF, Synchrony Financial. Actually, this chart doesn't look as bad, but if it went from I believe they're in the banking stock. If it went from IPO to 23, and it's currently at 38, dropped back down to 31. This, if you were in it at 2023, it went up to 38. You probably should have gotten out at about 34 or so. The market looks like it wants to mount some sort of recovery. So this is not a clear-cut sell. This is actually a stock I would be looking at. This could be a hold, or even looking at to buy at some point in the future if we can see an emergence of an uptrend. So this one is not that bad. If I owned it, I would I would tentatively hold it above $29. A drop below 29, I would look to exit. GGT. Target. I was in Target just the other day. Target stock. This is an example of a stock that's not in a heavy downtrend. It's not like Chesapeake where it's a series of lower highs, lower lows. But definitely we have seen a pretty significant pullback from this low of 30 to 80. Market is currently at 54. So this is a market I would have sold a long time ago. And so the question may ask, at what point do you sell? Maybe you have a rule that if a market drops 30% from its high, you can sell, or 20% or 25%. It just depends on the rule you may have. So if a market goes up to $80, a market goes up to $80, let's say 80 for ease of use. If it drops 20% of 80 is $16. So if it drops to 16 from 80, let's see how good my math is. 74, 70. If it drops to 70, probably that's a good point to exit. That is just an arbitrary rule. Some people it's 25%, some people maybe 30%. But have some sort of rule to say, okay, if it drop X percentage points, I will look to exit the market. Okay. Yes. Making money in the market is all about knowing when to buy and when to sell. This is an example of a strong downtrend. It's definitely not the same class of as Target. The market was topped out near 105 and is currently at $40. Very strong downtrend. This is a no-brainer. This is a strong sell. For the folks here, I hope you don't own many of these stocks that I've been saying. I hope it is just really a learning experience. Okay, 280, the market is down to 182. Again, fairly strong downtrend after a very good uptrend. So if you say 20%, let's use a 20% rule. 20% from 280 gives you 56. So 56 from 280, it's around 230, 220 something. So again, exit the market. Take some profits in your positions. And guess what? There are thousands of other stocks that you can look at. Well, I hope you all enjoyed this video and this exercise to know exactly or have an idea, okay, when to exit a stock or look at examples of stocks that you probably shouldn't be holding on to. I call some of them has-been stocks. Has-been stocks, at some point in time, they can get back a bid. And you can revisit a stock. So say, for example, the market starts to turn around and we see a series of higher highs, higher lows. You can then re-enter the stock, but re-enter when the stock is positive and moving upwards and not when moving downwards. I hope you all like this video. Please subscribe to the channel. We have some very good information. We'll be having more videos in the future along with the daily market analysis. If you have any ideas you want me to cover, send an email info@smartinvestorcentral.com. Doing this show is very fun. I actually do like it. And I really like analyzing the markets, looking at the markets, and looking for profitable opportunities. Thank you very much for listening, and I hope you have a wonderful day.